All right, so it's 5:08. Hello, everyone, and welcome to today's X Space. My name is Josephine, and I'll be moderating the session. And our speakers, we have Toochukwu Okoro, CEO of Azza, and Seunlanlege, founder and CEO of Polytop Labs, which created HyperFX and HyperBridge. So a bit of setting the tone before we get into it. But also, hi Toochukwu and hi Seun. If you can hear me, just give a quick hi.
Yes, I can hear you.
All right, thank you. And Sean, how about you? Can you hear us? I think you might be muted. Okay, great, fantastic. We'd have to make you a speaker. Yeah, all right. Okay, great. We can hear you now. All right. All right. So now we know that our speakers can hear us. Let's get right into the meat of today's matter. So I think since late 2024, we've seen B2B partnerships around FX settlement and payments multiplies from major names to emerging players, both from the investor side, from the builder side. But more recently, what we've seen is a shift towards settling FX on chain. So we know the infrastructure is being built and being refined daily. But who is actually using on-chain FX? How are they using it? And what has made them move from the rails they already had, the payment route, the people they were dealing with for payments to come on-chain? Also, the numbers are speaking for themselves. Volume has grown steadily through 2025 into this year. And on our end, since HyperFX launched this month, we've crossed 100K in volume and hit 1 million in liquidity, and we're still counting. So, Tochukwu and Seun are both building in this space, Azah on the on and off ramp side, HyperFX on the settlement side. So, we're going to be digging into what they've actually seen as builders, what businesses are showing up, what trade corridors, and what still needs to be improved. So, we'll start with what their products actually do. So, Tochukwu, in one line, what does your product do and who is it for?
Okay, my audio is clear, right?
Yes, very good. Yes.
All right, so Azza is basically a WhatsApp-based stablecoin in your bank, and it enables direct payments with stablecoins on ramps and off ramps, amongst many other things. But that's to keep it that simple. And who is it for? So it's a direct B2C product, right? I'll just answer based off of the real users that we see. So basically, people who already understand stablecoins, people who have been in the crypto space for a while, and basically like earning stablecoins, is freelancers, gig workers, and people who actually travel, traders. So that's like a certain group of people, right? And the major use case is payments, off ramps, and then occasionally we see people do on ramps, right? And that is usually around maybe people who own businesses or are trying to like maybe use USD or like other stable coins as some store of value against the naira. So that's basically as simple as that. I Yeah, hope you got that.
Yeah, I did. I did. And sure, on your end, what does your product do and who is it for?
Yeah, so HyperFX is an on-chain FX desk. It allows people to swap between all the tokenized stablecoins, especially non-USD stablecoins that are now coming on-chain. And it provides basically a cross-chain venue, so you can swap from any EVM chain that you have your assets on. And it provides basically the deepest liquidity and zero slippage. And who is it for? So HyperFX is very unique in that it's actually for everyone, right? Consumers can go on the HyperFX app, and if they have a self-custodial wallet, they can actually execute swaps between stablecoins. But I think the people who will find more value from it are going to be neobanks, neo-finance players who are especially in the cross-border space that need to make cross-border payments. They're the ones who have a lot of FX demands, and they have very zero tolerance for delays and zero tolerance for high slippage. So these are the broad categories of users that we're seeing on HyperFX.
Okay, so Sean, let me stick with you for a bit. And what made you decide? All right, so you're building a product and it's a B2B product. So there are two ways to do FX. There's the typical traditional way and there's on-chain. What made you decide that on-chain is a better way, or is the way you'd want to see and provide FX to be settled? What made you decide that, on-chain, let's build on-chain instead of the regular rails that we use?
So there's two reasons for this. And I think the first has to be contextualized because I come from a DeFi background. I've been working in the industry since 2018, since I joined Parity, where we were working on Ethereum and Polkadot. I think that's now 8 years. So wow, it's actually been a long time. And in DeFi, the first things that got invented that really, I would say, kickstarted the whole DeFi revolution was AMMs. So AMMs essentially were a way for people to swap between different tokens on the blockchain. And it was invented actually by Vitalik. Vitalik wrote a very rough idea about AMMs way back in, I think 2016, 2017. And Hayden Adams, the founder of Uniswap, actually went ahead and invented it, right? And what AMMs have done essentially is they've created an aggregated liquidity layer for all of DeFi. So typically, the only way you could trade blockchain tokens, like the crypto tokens, like Ethereum itself, actually, and all the various other tokens that were launched on chain, was you'd have to essentially use a centralized exchange. And there was a lot of dissatisfaction from the community that we couldn't use blockchains themselves to trade these tokens. And so when the AMMs got invented and they sort of became mature, these AMMs essentially became the deepest venues for crypto token swaps. So you could actually go on Ethereum itself and buy Ethereum with like USDC, USDT, or whatever tokens you had. You could actually swap from any token to any token on chain, and they would be routed through these AMM pools. And these pools were so deep and permissionless that a lot of people who then went on to build wallets, so MetaMask, Trust Wallet, really any wallet you use today offers you a swap feature, right? They allow you to actually do a swap right there in your wallet. But you see, these wallets, they're not maintaining their own liquidity pools, right? They tap into the global pools, the global on-chain pools that are available to everyone on the blockchain, and they route through those pools. And so this is a model that I think can be paralleled with the existing fintech space, right? You can basically think of every fintech venue as essentially a wallet, right? It's a wallet application, kind of like your traditional crypto wallets. I mean, the only difference, I guess, is that these are custodial wallets where, crypto wallets are non-custodial and you manage your keys. But there's something there's something that's different about these, this parallel is that every fintech essentially is running its own liquidity pool. This is what we refer to as their float, which they then use to settle trades for their users. There is no global shared pool across these fintechs. And of course, there's been lots of players that have tried to build a shared pool, but none of them have really taken off because they all are constrained by liquidity, right? The difference is that blockchains are a neutral ground where anyone can bring their liquidity and provide liquidity to the pool. Whereas with your traditional fintechs and these off-chain liquidity systems, there's a lot of hoops you have to go through, KYB, AML, and essentially you didn't have to give up custody of your liquidity to some platform that can then provide that liquidity to other fintechs, or you give it up to the fintech itself so they can provide that liquidity to their users. And so this model has essentially prevented fintechs from accessing very, very deep liquidity. And we see this essentially in the fact that rates are very, very different across fintechs, right? If you go on a Gray, if you go on a Rainest, you go on an Onboard, they all have very different rates. And this is because they all have their own different pools and they're all pricing their liquidity very differently. And so our thesis is that eventually, the fintechs are going to catch up to DeFi technology, and they already are, right? They're already using stablecoins, US dollar stablecoins to settle cross-border trade. And so Onchain FX is not a far step from those measures already. If you're already holding assets on the blockchain, then that just means you can already start to do swaps on the blockchain as well. So we saw Onchain FX as essentially being very inevitable for fintechs, for neo fintechs. And the launch and the validation that has come from the community and everyone who's integrating, I think, has just proven our thesis to be right.
All right, that was very insightful, and it's covered. I think the next question I was going to ask about when you notice a change in the market. I think as more businesses go on chain, I think I'm curious to see how the traditional rails will react and what traditional institutions would come on chain, and further from banks to government and all the above. All right, Toochukwu, I'll come back to you now. So, what's your typical user? Let's say, and not the regular your ICP. Let's say among the last 5 real accounts that have transacted on Azza, just tell me one. What's one person that was like a typical user that keeps coming back? So like for maybe for every, let's say for every 10, or I think maybe a bigger number to say is for every 50 users, you're likely to see that one type of user among them. Or rather, for every 10 users, you are likely to see that one type of user among the 10 users that have transacted on Azza.
Yeah, so yeah, a majority of that would just be users who are looking to just off ramp, right? I'd say if we're looking at a ratio of transaction split between like the type of transactions we do, off ramps and payments take like the I call it the lion's share. Yeah, basically. So they're already like on board with their stable coins from like whatever chain, and then they're looking to just quickly get that into Naira or any of the fiat currencies we support.
Okay, so building on that, so far, has there been any type of user or use case that surprised you? You built for this, but then somebody else came in here and used Azza differently.
Yeah, of course, like that happens like a lot, right? So there's basically like a number of things that I've seen across board. Um, there is so on ramps have basically been like one of our core offers from day one,
Mhm.
and um, so I'll say although it doesn't make up like I'll say up to 40% of our transactions in total, it's still like
Yep.
one of the most in terms of so that was in terms of volume, but then if you're
Mhm.
looking at transaction so for like every one time transaction or rather every first time transaction for new users in maybe like a week, right?
Mhm.
I usually see up to like 50% of them being like on ramps, right? And
Yeah.
I'll see people, doing small numbers, like very, very small numbers, and usually hope to use that to catch like an arbitrage opportunity between like other and different platforms. I
Mhm.
know this because like I've basically spoken to a number of the users that I see doing you'll be
Yeah.
surprised like 500 naira into like into 20 to 30 places, right? It's kind of like an
Mhm.
odd thing to do. If you should just do the 50K once, do it once, but then they just want to like do it multiple times, right? And
Mhm.
yeah, there was times where people would want to tunnel between maybe naira and an end currency like rand, and they we didn't actually like initially when we built Azza, like it wasn't like end to end like fiat to fiat on all the settlement sites. So we did see people like tunnel a lot, in with naira, out with like another currency or vice versa. So it's also something that gave us an insight to now engineer for like so you can just make direct cross border payments with like your fiat on one side, which
Mhm.
even gave us an insight to what kind of um I would say like infrastructure resources to even save on those kind of transactions. So yeah, in summary, I think those are like the most current ones I've seen, right? The other ones are like
Yeah.
pretty much expected.
Okay. All right. So you mentioned currencies and trade pairs. What two trade pairs have you currently? Let's say we're in the second half of the year. So for the first half of the year, what trade pairs saw the most volume on Azza? Because we're trying to figure out who's using Onchain FX, and if they're using Onchain FX, what currencies are they trading? So
Okay, so
what did you see
so
the
so that I
most?
can like answer your question very well. So just explain to me, do you mean like the pairs are we considering stablecoin against fiat or are we just considering fiat against fiat? Like
Okay. So I think both sides of it consider stable coins against fiat. You know what? Let's just do one because that's typically what you do on chain. So stable
okay.
coins against fiat.
Okay, so currently Azure supports about nine, approximately like 9-10 blockchains, right? And we do have like a split. So funny enough, I have it right here open on my screen. The distribution between all the stablecoins it currently supports. So it currently supports three stablecoins and USDT. They are USDT, USDC, and cNGN. cNGN is only available on two of those blockchains, two of the 10 of those blockchains, right? Which is base and BP20. So just to take like a general split, right? USDC currently has like 52% of our total like transaction volume when it comes to stablecoins. USDT takes the smaller size, which is 45.4%, and then CNGN is about it's like approximately 3%. It's like 2.7%. So USDC, I think one of the major reasons why USDC is currently leading among like the three stablecoin pairs is because we only support USDC on base. We don't support USDT on base. It's not even popular, by the way. Like, I don't think anybody really wants that. I might be totally wrong, but I don't think anybody wants USDT on base. And base has and on Azza, base currently has like a very large chunk of. I think it's like the third highest blockchain in terms of like if we're looking at like the split across the volumes on all the blockchains, it's the third. So, and all that volume just, is aggregated to USDC. But in terms of transaction counts, like I think USDT like dominates the rest of the pairs. Then cNGN is quite a unique case because you know there was everything that we saw with cNGN at launch, right? A lot of people were maybe I won't call it like skeptic, but maybe didn't necessarily like understand the use case for this. So now these volumes I'm counting are not anything around treasury. These are just customer deposits and customer transactions, right? Like customer transactions, basically, not anything around treasury. But like I would say, the first thing that we actually saw a use case for cNGN was treasury, right? FX, and now pushing it onto our consumer side. What even got the volumes up from like maybe 0 point something to way over, 2% was when we were working around how to manage customer wallet funding with Naira, like the easiest way to just do it was to just match NGN to cNGN one to one on Azza. So when people would deposit Naira directly to like official accounts that we provide on the platform, we just mint cNGN directly, and we've basically seen the volume grow from that angle. Yeah.
Oh, that was particularly in depth. And I think it's the USDC versus USDT for volumes battle is one that I am keenly watching as well, especially with OUSD hot on everybody's heels as well. Okay, Sean, when you're talking to people about HyperFX and they finally decide to bring their FX settlement on chain, what's the reason you've seen people say, okay, I agree, I want to switch, I want to come on chain? Was it price? Was it speed? Was it they had a failed settlement with regular rails, or they had to deal with some other, payment headache? What makes people switch and say, okay, I'm coming on chain?
Yeah, so it's basically a combination of the non-custodial nature of HyperFX, because it's on-chain and because it's mediated entirely through smart contracts that are programmed to either, settle your trade or basically refund your assets. This usually is very compelling to people who have, potentially dealt with off-chain OTC desks and have even potentially lost money, working with these desks. And the second thing I would say is also speed, right? So in the lucky case in which your OTC trades go through, it just takes a painfully long time before you get your assets, right? I spoke to a fintech just earlier today, and they're like they have to deal with multiple OTC desks because typically these desks can do very high volumes. So if you have to do like a 100K trade, you would probably do 10K here, 20K there, spread out across everyone. So just so they can settle him on time, because he knows if he gives all of that volume to one person, it's going to take longer, right? So, but even 10K, takes up to 30 minutes and an hour. And so they were very convinced, after we showed them like a trade that settles in literally 30 seconds, that HyperFX is definitely the future. So yeah, it's a combination of, like I said, the non-custodial nature and the speed of settlements. Of course, rates are a thing, but look, people are willing to pay the price for the added benefits of being fully non-custodial and being very, very fast, right? In life, everything is all about trade-offs. Nothing is ever going to be perfect. And dare I say, there might be even an FX trilemma, right? Which is where you kind of have to pick between three different trade-offs. Do you want it fast? Do you want the best rates? And do you want it to be fully non-custodial? And I would say FX desks can only also pick two.
Okay, so on the flip side of this, I'm sure you're talking to businesses that you've talked to them about on-chain and they still said no. So for businesses that have said no, did they give you a reason? And if they did, what was their reason?
I think the reality is HyperFX operates entirely on stablecoins, right? And if you want to do Naira to USDC or USDT, you essentially have to on-ramp into cNGN. And unfortunately, the reality is a lot of people still have that, allergic, convulsive reaction to cNGN. And, I'm not too sure how to remedy this because, I think it's also, like I said earlier, it's a cultural thing. There's typically a lot of like I want to say aversion, especially in Nigeria, to new technologies and new paradigms and new ways of doing things. People are very, very comfortable with the old ways, even though it's less efficient. And so I would say the biggest barrier for people trying out Onchain FX is, I guess, understanding cNGN. But this kind of baffles me because these are same businesses that are very comfortable holding USDT and USDC. And we're like, hey, dude, this is a Naira stablecoin. But they're like, I don't know about that, bro. So I just find that very funny personally.
So it's a we don't understand problem. It's a trust problem, which is a trust problem is a bit not hilarious but interesting, seeing as HyperFX is pushing not pushing but based on trustless transactions and permissionless transactions. Okay, Tochukwu, I'll come back to you. So let's say you've had a ton of volume and transactions, and where do things break? Because the thing with infrastructure is that you build it, it breaks, you fix it. You build it, it breaks, you fix it. So recently, or if not recently, but when you were building Azza, what was one of the first things that broke that you had to fix?
Well, I'll just say one thing, right? Like, because if I was to start going through them now, I think there might be quite a number. But I think building this kind of like building a product, building Azah or building like a product like Azah has like you need to have like a lot of dependency for payouts, especially like in different regions, and you need to like have like certain amount of like redundancy and liquidity in order to basically keep your customers happy, right? It's not like everyone is going to be very patient. Actually, no one is patient. But then I think the first few times we saw things actually like breaking out there in the open was with a certain dependency on maybe certain providers, and then they just like fail with no heads up, and maybe there's almost like no plan B for it, and then you just have to like fix it right there and then. And on the liquidity side, that is also like a thing, because if there's something that everyone currently like knows is the space is like there's always like a cost to like fast liquidity. If you need fast liquidity, it's usually expensive. So in the early days, like having to manage like a certain float, right, across different pairs and different chains, you either had to, have like a lot of money, or be able to like work out with businesses to either like access certain type of like OD contracts, like overdraft contracts, I mean, or build like a really good reconciliation system. So none of these avenues that we experimented with, I just listed now, were actually like very efficient because you still see like lapses in the system where you could either like lose money, or maybe even your LP still like is heavily dependent on another LP. And in order to access liquidity very quickly, you have to pay the price of that liquidity. So there are like most things that would actually like break in building this kind of infrastructure, right? But I think like over time, a lot of things just began to take shape and make sense. Over time, we're able to like build very very good redundancy for different payouts rails, both on ramps and off ramps, and also like figuring out liquidity usually never ends, right? Because like there's usually like a lot of demand for different pairs, right? Both for fiats, which is I would say the other side to Onchain FX, right? At the end of the day, there always has to be redemption, right? People would always want to like put the money in the bank or in a mobile money wallet or in cash even, right? And that has like a lot of figuring out to do. But we've been able to, I'd say, over all this all this time where we've been building, we've been able to, I'd say, figure out how to handle all of these things and like aggregate them to make them work perfectly. So yeah, that's pretty much it.
I think any operators or people in treasury teams or building anything probably relate to the problems or things breaking unexpectedly because somebody said we're not going to be a provider anymore, or there's always a dependency, there's always something that breaks somewhere. But the great thing with building is that you take it to the chain, you learn your lessons, and you end up with a better product the more things break. Okay, so Sean, back to you. So we're talking volumes now and on-chain volumes. So I know HyperFX is both has the front-facing side and the integration side. So currently, what are you seeing? What's the ratio of people that are coming from the front-facing side and direct product use versus those who are integrating HyperFX into their flow with the SDK?
So, I mean, I'm going to say something that's going to surprise everyone, but actually, our SDK integrations are already driving the majority of our volumes. And the reason for this is simple, like because HyperFX becomes a part of your workflow, your backend, automatically settling trades as they come in from your users. There's just a lot of potential to just drive more volume versus people coming on the app and having to connect wallets or maybe the on ramp into cNGN from Naira. Like that's just a lot of like friction. And to be very honest with you, this is not our core products, right? Our core product is not the front end where you go and you connect your wallet and you execute a swap. Our core product are actually the set of contracts on chain, the hyperbridge infrastructure, the liquidity providers who are standing by ready to fill your orders. Like that's our core product, that's our core infrastructure. And I think long term we'll continue to see that the SDK drives more volumes to HyperFX than our front end. And we're already in conversations with quite a few fintechs who are exploring this SDK integration. There's already a few that's been completed. And if you look at the HyperFX page, you'll see all these different referrals who are routing orders directly from their backend and it's like separate from HyperFX. And look, I'll tell you for sure, like we've spoken to one major like big player, since HyperFX launch, who are already scoping it out for Onchain FX, right, for their products. So, our thesis continues to remain that and I think Lava VC recently kind of posted something about how neobanks are essentially a distribution layer for all the underlying providers, like Toochukwu just said, like essentially they're a wrapper around, the FX side, the lending side, with how they monetize yields and some cards product, right? And they're saying that like, oh no, we are only interested in neobanks that are fully like vertical, right? So they handle their own FX, they handle their own cards, and they handle their own payouts. This is like systemically impossible, right? Because it's just so much infrastructure that no one person can build. And I really, really learned this when we spoke to this really huge player that is in the Nigerian payment space, processing trillions of naira yearly. And they're coming to us for FX, right? They said they're not just coming to us, but also exploring all the different like FX providers. Like even they can't even do their own FX. You know what I'm saying? So I think the reality is that everything will continue to be, modular and pluggable, and essentially you will build your products based off of existing modular products that exist on the market, right? So Onchain FX is definitely one of them. I mean, no one's going to start their own Mastercard and then get all the merchants across the world to then start supporting their custom card infrastructure. That's just never going to happen, right? You're still going to plug into a Mastercard. And if you need to monetize yields, you're still going to plug into like an Aave or like a Morpho or like a Compound or like an Euler. These are all these different on-chain lending protocols that can offer yields on deposits. So I think this is going to continue to be the case. And the products that win are essentially going to be ones that win off of distribution.
All right, thank you. I think if you have any questions, we have a bunch of questions anyway that have come in, but if you have any questions, please just leave your questions in the chat or under the FX post that's pinned, and we'll get right to your questions. But let me see the ones that have come in via the DM. Okay. Let's see. So I have a question here. So sometimes I need a source of funds documentation for large inflow. How do I get paperwork and documentation? So this is both for using Azza and using HyperFX. So Toochukwu, you'd answer first, and then Seun, you go next.
I heard the question, but I want you to take it again so I can really understand what this person is asking.
Person asks that sometimes when they're doing large, trades, or they have to receive inflow and they need, documentation. What paperwork can they get? What documentation can they get using Azza or using HyperFX?
So, yeah, I think I asked the question again because I really wanted to understand like what type of documentation. But of the product, I'll just say, um, from the product you can. I mean, for every trade, you always get like some sort of receipt, and then you can generate a transaction statement that has like all the necessary details of your inflows and like your payouts across like the chains and all of that. And then yeah, I think that's like about it for most of what you get like off the book if you're transacting with Azza, right? So if there's a specific kind of documentation, I really want to get it clear.
So I think source of funds documentation. So if you need a source of funds documentation to take back, what paperwork do you give me? But I think you've answered it.
Yeah, yeah.
I think you have.
So like, I mean, if the user has like KYC on Azza at the moment, like it's even better, right? Because like a lot of the data that we already collect during KYC is already like captured on the statement, and it shows like a current balance, just like what you'd find on your regular like OP
Mm-hmm.
statements, right? So inflows, payments across the chains, the assets, everything is there.
Mm-hmm.
Residential address, name of the so everything is all there, right? And you just basically type generate statement on Azza, and then you should be able to get it. Captures everything from first transaction to the last one.
Great. All right. And Seun, on HyperFX documentation, how do you provide documentation for a business or a user? How does that work?
Unfortunately, HyperFX is a fully on-chain platform, so we don't collect any kind of KYC or identifiable information about our users.
Mm-hmm.
If you need to, I think if you need documentation, then you only need documentation about the transactions that actually touch fiat rails, so the bank accounts.
Mm-hmm.
And I think you would basically only be able to off-ramp your trades on HyperFX using a fintech, right? Like you would either send your cNGN to something like Azza or something like, I don't know,
Yeah.
Roku, Quidax, Busha, and then yeah, you would essentially get the receipts from those venues, or maybe if you are on off-ramping USDC, USDT to a US bank account, then maybe like a bridge, like a BVNK, and the rest would just give you a receipt for whatever trades that was settled into your account. But all the stuff you do on chain,
Mm-hmm.
unless you have to report it for like tax purposes, which I'm not too sure what that looks like, you can always get that information from the blockchain explorer. All our stuff is fully on chain.
Okay. So we get transparency and we get KYC. All right, great. So we'll be wrapping up quickly. And so, Sean, if somebody listening right now runs a business that has a cross-border FX problem, and basically they're having issues sourcing FX, what's the first step they should take this week?
I think the first thing they should do is go on HyperFX and do a trade. Do a small trade. Do like $1 or do like, I don't know, 2,000 Naira to USDC and kind of see how fast it is,
Mm-hmm.
see how easy it is, and just kind of see all the problems that you had dealing with all these OTC desks kind of fade away into the rearview mirror. And the thing is, you don't necessarily have to use the front end as your primary source FX. Like I said, it's an SDK that can easily plug into your backend workflows and handle FX settlements like automatically.
All right. And Toochukwu, if somebody's dealing with, on-ramping, off-ramping, Naira or, another African currencies you support, what's the first step? What's the first step they should take this week?
Actually, you know, of course, like onboard on Azza, it basically takes less than 2 minutes. Yeah, you get like your wallets. KYC is also a very easy process. Hopefully, luckily for us, it's also non-doc, so it's literally on the go. So far as you have like your face tagged and your ID numbers, you're good to go, right? So there's even something that we forgot to mention, Sean, right? So we have like an completely like end-to-end integration directly with HyperFX, which, as I also mentioned, right, basically like completing like that flow end to end on the settlement side for people who just want to trade directly from HyperFX. I think we did a couple sprints on it, and it worked out really well. So for people who already like able to like exchange to cNGN directly with HyperFX from like USDT or USDT to cNGN, putting that on Azza basically like gives you cNGN for Naira 1 to 1, and that
Mm-hmm.
is like with no hoops in the middle. And I think what the integration between Azza and HyperBridge currently does right now is you can use your Azza wallet address as the receiving address while swapping on the HyperFX UI, right? So if you want to go from like USDC to cNGN, and you like put the receiving address as the Azza address, so far as you've basically configured your phone number on Azza, sorry, your bank account, your primary bank account on Azza, because we do have something called a primary bank account.
Mm-hmm.
Right. So once that's done, any swap done directly like from HyperBridge or sorry, HyperFX to cNGN, and the cNGN hits Azza, it automatically just converts to Naira without the user or the person having to um, initiate an off ramp manually. Right. So yeah, if people already have like cNGN or they're able to like go from USD to cNGN, we basically handle that 1 to 1 with the Naira on the other end.
All right, thank you. And we'll be wrapping up now. And so I'm just going to ask both people where people can find you and try the product. Share on your up, where can people find you and, or rather, where can people find and try the product?
Yeah, so just hop on app.hyperfx.finance and you'll meet our beautiful DeFi UI where you can do kind of, swaps between cNGN and USDC. And if you want to off ramp from USDC to like narrowing your bank accounts, just get an account on Azza, get your deposit address, put that into the recipient address, and you can essentially in one single transaction off ramp USDC, USDT, to your Naira bank account through Azza as sort of the cNGN off ramp leg, right? So check it out, and yeah, we'll look forward to seeing you guys integrate the STK eventually for more automated workflows.
All right. And Toochukwu, you're up next. Where can people find and try your product?
Okay, so I mean on my X right now it's like at use Azah, right? And it's useazah.com. Azah with a double Z, please. Use Azah with .com, right? So yeah, it's there. The big get started button is staring at you in the face, and it will get you directly to WhatsApp, where every other thing, it's basically a bridge from there. So yeah.
Right. Thank you. Thank you, Seun. Thank you, Toochukwu, for a very insightful conversation. I think it's great that we're seeing more products being built on chain and on WhatsApp. I'm interested in seeing how much this integration and the infrastructure that's being built develops. And yeah, have a wonderful evening and rest of the day, everyone. Thank you so much for joining in. Cheers.
Thank you.
Thanks, everyone. Cheers.